Hey, and welcome back to another video here at FiscalVoyage. My name is Felix, and in today's video we're going to talk about 3 real estate investment trusts or REITs that pay high dividend and look to be fairly valued to undervalued to slightly overvalued. So 3 different companies all paying high dividend, and they've actually increased the dividend in September. And also, let me know in the comments below your favorite 3 high yield dividend REITs. Maybe I could research these companies, or maybe I own some. Let me know the REITs that you own, and let me know your top 3 favorite REITs. But first, before we go over the 3 high yield dividend REITs, if you're new to the channel, make sure to hit the subscribe button, as well as check out my free ebook in the description below, 5 quick metrics to look for before you spend more time in any particular companies. So here's the first stock, retail stock for high dividend income. As you can see here, STOR Capital Corporation, ticker symbol STOR. I've made a few videos about this company, and the company still looks to be attractive right now, fairly attractive. The company pays out a nice dividend at 5.15. Price to fund from operation at 15, which is fairly valued. As you can see here, the company before the economic shutdown, it was about $39 to $40, and right now it's only at $27. So I could definitely see this company reverting back to $40, and you have a nice capital appreciation there. If we look at the dividend, the company has been growing dividends for 5 years. The payout ratio is decent at about 80%. If we look at the dividend growth, they announced a 1-year compound growth rate of 7.34, 3-year growth rate of 5.99, and the bright thing is the company actually increased the dividend by 2.9% earlier in September. So September 15th, so basically almost a month ago, and that's very positive considering that most of these retail companies, REITs, cut the dividend or froze the dividend. So I'm very happy that this company increased the dividend. So it shows the confidence in the management team as well as the outlook for this company. So let's look at the fast graph for STOR. As you can see here, earnings is expected to drop slightly in 2020 from $1.99 to $1.84. It's about 8% decrease, and analysts are accurate with estimating this company, so I'm very confident with these estimates. But as you see here in 2021, expected to grow about 4%, in 2022, 7%. And you can see here, the company looks to be fairly valued based on its normal multiple of around 15.4. Right now, you get about 15 or 14.9. The company is a BBB credit rating, so it's investment grade. Long-term debt to cap only 46%, so it's a decent long-term debt to cap ratio. So overall, STOR Capital does look attractive. Again, very nice high dividend yield. The total return potential is low right now because of the fact that it's fairly valued and earnings are expected to not grow tremendously. But the dividend is very well covered, as you can see here, 76% based on the 2020 expected earnings, 75% based on the 2021 expected earnings. So therefore, the dividend is well covered. So you have a nice dividend yield of 5.15 currently. So that's very attractive. So let's look at the next high yield dividend REIT. The second high yield dividend REIT is Retail Income Corporation, ticker symbol O. I'm sure you guys heard about this company. I've made a video about this company a few months ago. Had it as a buy when it was around $40, I think $47 or something like that. You can see my previous video on that. And you can see here the company still hasn't reached again to the price before the economic shutdown, around $82. So you can see here the 52-week range is about halfway, so that's very positive news there for us investors. The yield is lower than STOR at 4.44, but still very much higher than the S&P 500, which is under 2%. So the yield is very attractive here at this level. Price to fund from operation at 18. It is on the high side, but still this is a high quality monthly paying dividend company, Retail Income. And another bright news here also is that September 18, the company also declared an increase, about 0.2% increase from the prior dividend. So that's very, again, the fact that these companies are able to continue to pay the dividends as well as continue to increase it just shows the resilience, the high quality of these companies. So that's very positive news for all realty income. So let's look at the fast graph for this company. As you can see here, earnings has been going very nicely for the past 10 years. They had a down year in 28 and 29, or 2008 and 2009, -2%, -2%, but it's been going very nicely. And even this year, they're expecting to grow at 4% for 2020 and 3% 2021 and 3% in 2022. The analyst scorecard has been very, very accurate in estimating these earnings. So I'm very confident in these earnings. But you can see here the company tends to value around a multiple around 17, and it's slightly higher than that. So it looks to be fairly valued to slightly overvalued for this company. But it's such a high quality company at a 5 or 4.44% dividend yield, S&P credit rating of A-, high quality investment grade. Lower debt to cap ratio at 38%. Overall, as you can see here, the company does grow earning very nicely and is continue expectedly to grow earnings as well. Again, it looks fairly valued to slightly overvalued based on the fast graph, but overall, this is a high quality company and it's good to purchase high quality company at a fairly fair price. So this is why Realty Income Corp is my second choice for high dividend income. My third and last REIT for high dividend income is WP Carey Inc., ticker symbol WPC. As you can see here, the company is going for $67.88. Currently, or previously before the economic shutdown, it was going for $88. So you have about $10 to $20 worth of price difference before the shutdown. It pays out a very nice hefty yield at 6.14. Price to fund from operation at only 14, so it's an attractive valuation there. Another good thing about this company is in September 17th, just like the other two that I mentioned, grew the dividend about 0.2%. Again, they did not cut the dividend, they did not freeze the dividend during this economic shutdown, so that's very attractive there to find companies that continue to increase dividend even in these hard times. And if we look at the dividend growth for this company, let's go here, dividend growth. You can see here they've been growing dividends for 9 consecutive years. The 5-year growth rate is slow, but I think they were, 5-year growth rate at 2.36. So the growth rate for the dividend is slowing down, and that's because if we look at the fast graph, earnings has been dropping. As you can see here in 2018 and 2019, it dropped by 7%, and in 2020 it dropped by 6%, or expected to drop by 6%. But analysts are expecting a 2% and 2% increase for 2021 and 2022. The analyst scorecard does look very positive, that their expectations have been pretty accurate. S&P credit rating at BBB+, so it's investment grade. 46% long-term debt to cap, so it's a good debt to cap ratio. Again, the dividend yield is very attractive at 6.14, so it's almost 4 times or 3 times higher than the S&P 500. As you can see here, it looks to be fairly valued to slightly overvalued based on the fast graph. If we shorten this time period here, you can see it does look to be slightly overvalued to fairly valued. But even though if you were to purchase today, you have a very nice yield at 6.14. As you just saw, they increased the dividend slightly. But overall, the company is a high quality, high yield, and high income dividend stock for investors looking for a real estate company to invest in. All right, so there you have it. Those were the top 3 REITs for high dividend income. These REITs, again, looks to be fairly valued to slightly overvalued, but overall, high quality companies. As you saw, they increased the dividends last month, all 3 of them. So that's very positive news. They did not once freeze the dividend or not once cut the dividend during this hard economic year for 2020. But overall, these are my top 3 favorite REITs. Looks to be fairly valued and high quality companies. Thank you for watching, and again, if you're new to the channel, make sure you hit that subscribe button and check out my free ebook in the description below, and I'll see you guys in the next one.